program is sponsored by Team Reba of Remax Metro East Side and Eric Osnes of Homebridge Financial Services. Welcome to Open House with Team Reba. Each week, Team Reba will be bringing you a roundup of real estate and mortgage news, along with information about the local Puget Sound region, highlighting some of the best and brightest entertainment options, family events, neighborhood highlights, and local business interviews, so you can feel right at home in the Pacific Northwest.
Welcome once again to Open House with Team Reba. I'm Reba House of Team Reba, Remax Metro East Side.
And Eric Osnes here from Homebridge Financial Home Mortgage. Happy weekend.
Happy weekend right back at you, buddy.
Here we go. 5 years of Open House with Team Reba.
Going into our 6th year. It's crazy.
That went fast. That went really fast.
And I can't believe we still have more things to talk about.
We always have more things to talk about. That just never goes away.
It's kind of surprising, but it's
really
cool.
I mean, our industry is constantly in flux, constantly changing this year.
Yeah,
of course,
we're going to be talking about a lot of flux on this show. That's for sure.
No exception there.
Yeah,
that's for sure.
Let's hope it's just not acid reflux.
Could be.
It's always possible depending on what's going on in the markets.
You never know. We had some last minute weird, strange situations with some loans I was working on this week.
Yeah.
So,
well,
it's always something.
Do you want to talk about that first, or do you want to go through the rates first? And then let's talk about the things that are giving us a little bit of indigestion.
Let's do that. Let's do that because as we're nearing, less than a month now to elections, and this is a time when the markets can get a little bit jittery. There's been some years past where the markets actually had their election a few weeks before the actual election, and this year I don't know that that's quite happened yet, but we are seeing increased volatility with interest rates. So
so a little acid reflux there,
just a little bit. With that said, we're still so good, but we are up a little bit from our all-time lows in August.
Sorry, I had a little Neil Diamond moment. So good, so good.
Right. That's right.
Sorry. Move along.
Sweet
Ignore me.
Rates of mine. Yeah, something like that.
Did you say sweet rates of mine? Nice.
Isn't that how the song goes?
Yeah, something like that. Yes, that's exactly how Neil wrote it.
Rates have never looked so good. So good. So good. So good.
Yeah. Okay, give us the rates. Stop singing.
Well, here's where we're at right now. So the national average is for a conventional 30-year fixed rate loan. We are at 3.04, so just a nick over 3%.
Okay. But still great.
Oh, good heavens, yes.
Yeah.
And now I'll kind of finish that, and I'll give a little bit of commentary on that. 15-year fixed rates are hovering at around 2.42%. FHA and VA, 3.38%. And jumbo, 30-year fixed rate. So he's in King, Pierce, Snohomish Counties of Washington. That's any loan amount over $741,750. And all other counties in the state, $510,400. We're sitting around 3.38%. So still very, very good. And with jumbo, you may find some lower rates as well. The jumbo market is a little bit more fractured, than a standard conventional mortgage rate is. So what's happening with the forecast and the outlook on interest rates is that really it's becoming a bit more data driven at this point. The markets are looking at the employment numbers, the unemployment numbers, and the inflation numbers. The Federal Reserve has come out and said they're willing to let inflation run a little hotter than it has in the past. And that's not necessarily good news for interest rates. That can put a little bit of upward pressure on the rates. Anything crazy? No. I don't think we're going to see anything dramatic happen with interest rates unless we have some sort of a major economic or social catastrophe, and that could cause a little bit of change.
I love how you always qualify that. Economic or social catastrophe.
I've sort of added the social part over the last
Yes, you have.
year.
You have.
Yeah.
Because a lot of times it's like political stuff, but now it's even more.
And the thing is, for honestly, for most of us, politics does not really affect our pocketbook on a day-to-day basis.
No, it doesn't.
Until you go to buy a house or a car or take out a home equity line of credit.
Right.
And then it does. You could be sailing along and we think we're at a certain rate, and then somebody makes a speech over the weekend and that rate goes up on Monday,
right?
And all of a sudden your payment just went up by $100 because of a speech. And that is absolutely one of those times where politics hits you right between the eyes.
Yeah. Well, you know what? You're correct. I actually just noticed, because we've been talking about what's going on with interest rates and issues with banks, I actually, after having just had I bank lots of different places. I'm not necessarily saying, hey, everyone go out to Boeing Credit Union, right? This is not my thing. But I do happen to have a Visa that I have with them that I use for my business.
Yeah.
And after, so many years of having it open, they were like, oh, yeah, you're always great. You pay on time. You do all this stuff, right? Manage it really, really, really well. And they dropped the interest rate way down.
Yeah, nice.
Well, I just got a letter the other day saying, now it's not a lot, but they're raising the APR up about 1.5%.
That's a lot.
I mean, what they had dropped it from it went from like a 16 to a 10,
right,
and then now it's going to like 11.8 or something like that. And I thought, most of the time I do pay it off every month.
Yeah, yeah.
But it was one of those moments of like, why? I'm like, my credit score is great.
Yeah,
like, in fact, I'm in the middle of doing a refi on my boat there.
And actually, this happening at a time when the margins for banks are at record highs.
Yeah.
Banks are making money right now.
Yeah. And I'm actually refining my boat and my car.
Yeah.
And got some great stuff from BQ there.
Yeah.
So I'm getting 2% off on my boat right now.
Oh, nice.
Which is nice.
That's good. Yeah.
And then same thing, I'm redoing my car, which currently is at Sound Credit Union, and moving back over to BQ and going to save another at least 1%, maybe a little bit more by doing that. I'm very happy about that. But still,
I'll have to have a talk with them about that.
Yeah, I know. Yeah. It was interesting. But but
well,
generally speaking, everything has been really, really good. But you're right. I mean, anything can change in a moment. And
well, in mortgage, we had that happen about a month ago when the Federal Housing Finance Agency added a 0.5% fee on all refinance transactions out of the blue. Why'd they do it? Politics.
Right.
They're trying to take Fannie Mae and Freddie Mac back private. They've been under conservatorship now for over a decade, and they're trying to take them private, and nothing helps to take something private than pretty up the books, get a little bit extra revenue showing up in there. So that's happened.
Okay, but I have a question about that because I know you've brought that up before. Do you think part of that adverse market fee is also because of the forbearance issue that's going on and the concern about having enough around as they sort that out?
Well, there's
also the loan servicing issue that you mentioned too.
Right. Well,
are they tied?
If that were the case, then the fee would be on purchase loans also, not just refinance loans. But it was only on refinance loans, which makes no sense because a purchase loan is actually a higher risk loan than a refinance. So if you're charging an adverse market fee, meaning higher risk, you would think that they would go after the purchase segment.
I think they're just calling it that because they're just saying the market,
They are. Yeah, no question.
I mean, it's just a name.
It is.
But,
well, that was the rationale. Hey, we want to get more money in the books here. What are we going to call it?
Right.
And so somewhat unprecedented. That happened.
I was just curious about with the forbearance piece and everything else, if that was also meant to have a cushion around that.
Well, yeah, the forbearance is not going to necessarily lead to a dramatic increase in foreclosure activity, though.
Right.
Because there's an exit plan for a person in forbearance. There is a way to get out of it, keep your home. You're not, you will have to at some point catch up those forbearances, but sometimes that's just a second thing that's tacked on to the back end of the loan. There's a lot of different ways that can be set up.
Yeah, I was just wondering if that was part of it from the standpoint of it's going to take them longer to get their money, so why not get some other fees elsewhere to offset? But
interesting you say that.
Me speculating. Totally weird speculation.
Let me correct you on that. It's not going to take Fannie Mae and Freddie Mac longer to get their money. It's going to take the loan servicer longer to get their money because the loan servicer, who you make your mortgage payments to, has to make the regular monthly payments to Fannie Mae, Freddie Mac, whether or not they've collected that money.
Oh, so that money only goes to Fannie, Freddie?
Yeah.
Ah, okay.
Yeah.
All right. Interesting. I've actually I got to go back and figure out exactly which one of our shows where we talked about the loan servicing issue.
Yeah.
Because I have tried to explain that to numerous folks, and they always kind of look at me like, what? What are you talking about? Because most people don't know how loan servicing works.
Right.
So it's for listeners, just a reminder, we do have all of these shows on podcast, so you can go back and find them.
That's right.
On programs such as iTunes, Stitcher, Buzzsprout, or Spotify.
There you go.
Or whatever place you like to get your podcast.
Ask Alexa.
Yes, exactly.
That's right. 5 years of content. And, there's some good content in there. I mean, What do you want to know?
We give
you
good
got
content.
A question about?
I don't just give good phone. I give good content.
Right. That's right. Yeah, that's right. No, there's a lot.
Yeah, there's a lot of stuff out there. So anyway, but speaking of a lot, do we got a lot to cover in rates?
Well, that's pretty much it. So
That's it?
So overall rates are still extremely good. If I were a betting man, I would say probably better to lock in your rate,
Okay.
Than to float with the market. We're not really anticipating any radical drops in rates. If anything, there's a bit of upward pressure, on them right now. Again, nothing crazy, but a little higher than where we were. So if
I don't think it's going to slow down our purchase market for sure.
Oh, not at all. No, the affordability that we have with these interest rates is off the charts. Homes have never been more affordable. So that part is just wonderful, wonderful news for a lot of people. And we are starting to see a little bit of loosening of some of the guidelines that we've been facing due to COVID. I don't know if you follow this. Again, of course, on the show we've talked about this a fair amount, but there were some new requirements that were brought into lending underwriting rules as a result of COVID, especially affecting folks that are self-employed, where we're having to provide profit and loss statements year to date and bank statements to show that your deposit activity as a business supports the income that we're using to qualify. That one's still there, but we're getting a little bit more flexibility on some of our rules. So cross your fingers on that.
Good to know.
It's been rough if you're self-employed.
Oh, yeah, I imagine so. Well, you and I had talked about whether or not I might even look at some other stuff like that. And I'm just I'm trying to get my boat and my car done first, and then I'll worry about the other stuff.
Yeah.
Because
Yeah.
that's a maybe, right? That's a big maybe. Because I actually have a really good rate on it right now anyway. So it may not even be worth it. But when we get back after our break coming up, I think we are going to be talking a little bit more about what's happening on the real estate side of the market, right?
That's right.
Because I get all this wonderful, information around from the Washington Association of Realtors. We also have, information that's on the Matrix or Northwest Multiple Listing Service. So we're going to start covering some of that.
That's right. And I have one scary story too.
Do you want to start with that, or do you want to jump into this stuff first?
Stay tuned. We'll figure it out over the break.
Okay, we will definitely figure that out over the break. Here's a couple of quick messages for you. We'll be right back on Open House with Team Reba. Thanks for listening.
Open House with Team Reba on AM 1580. The Answer. Now, back to Open House with Team Reba.
Welcome back to Open House with Team Reba. I'm Eric Osnes from Homebridge Financial Home Mortgage.
And I'm Reba Haas from Team Reba.
And we're here every Saturday from 2 to 3 o'clock bringing information on real estate and finance.
And we're also here on Sunday afternoons from 3 to 4 p.m. And as we mentioned before the break, also on podcast.
There you go.
Yes, and you can also find us if you want to follow us and see other things that we're posting all the time. You can go to any of our social media outlets.
That's right.
We're on quite a few of those. Both of us are on Twitter. I'm on Instagram. Are you?
Yeah,
I think you are.
I am.
But you're not on there
I'm
a whole lot.
Heavy on there.
Okay.
But more just Facebook and
yeah, we have
Twitter.
Facebook pages, and then you and I have also done some Facebook Lives over time.
Yes, we have.
Yes,
yeah, we should be doing.
And LinkedIn. You can always connect with us on LinkedIn too.
Yeah, I'm on there too.
Yeah.
So just look up for me. You can check me out at Eric is my banker, Eric with a C. You can also, if you have questions, email me, Eric at ericismybanker.com. Always happy to help work on those story problems.
Oh, yes. Sometimes it's just a story that is a problem.
Yeah.
Which you're going to get to here in a minute.
Yeah.
But, of course, for us, if you go look up Team Reba, you're going to find us on almost every outlet that's out there. But, yeah, Team Reba, Remax Metro East Side, or Team Remax Metro Realty. So
there you go.
I actually go by both. I think some people might wonder sometimes why it's put two different directions. And it's because the designated broker I work with has two offices. So technically my license is held under the Seattle office of Remax Metro Realty, Inc., but he also owns Remax East Side. And they market both of our offices together because it's the same designated broker as Remax Metro East Side.
There
So
you go.
if anyone's ever had any curiosity in that realm, there you go.
Just look up Team Reba.
Just
That'll
look up Team
be the
Reba because
easiest
you're
way
going
do
to
that.
find, you're definitely going to find me.
Oh, for sure.
Yeah.
Yeah, for sure. Well, before the break, I mentioned I had a scary story. And
Since we're coming up on Halloween soon, you might as well give us a spooky story.
Here's my Halloween spooky story. This is an interesting one. I have a client who we've worked with before, and actually has been a listener on the radio show as well.
And thank you, listener.
Who we are working on a refinance.
Although, given the story that you've told me, I'm not sure if he was listening very closely.
It's okay. It's okay. That's okay. Yeah. But working on a refinance, and we reached a point where we had to just update some credit. And I ran the updated credit, and lo and behold, this person just leased a new car.
You know how I feel about that.
And we always tell people
Like,
when you're working on a mortgage, if it's a purchase or a refinance, don't do anything.
Don't do anything.
No large financial
Nothing.
decisions. Just stay home, watch TV. That's it.
Don't go splurge on new furniture.
Right.
Nothing.
Nothing like that.
Don't go buy $2,000 worth of clothes or whatever. Just
no.
don't.
Because in this case, this lease was. I don't know, the payment's about $440 a month. Now, in financial terms, $440
Listeners, that
a
thumping
month.
sound is my head on the microphone.
So what does that really mean? I'll tell you.
Wow, that hurt actually.
At 3%, $440 a month reduces your buying power. Translate your loan amount by about $105,000.
$105,000. Okay.
$105,000.
Ouch.
So all of a sudden, we've got a situation where this person doesn't qualify for what they wanted. And so I called him up and I said, "Hey, did you get a new car?" And he's kind of paused. He's like, "Yeah."
How'd you know?
Yeah. And then he's kind of
quiet. He's
kind of quiet for a minute. He said, and this is the part I want our listeners to hear. They told me at the dealership it would not show up on my credit because it's a lease.
No, they did not.
Yes, they did. And I don't want to name the name of the dealership or anything like that.
Yeah, but I want to know off air. Oh my God.
Let's just say the car is Swedish. But anyway, so
car dealerships really tick me off. Okay.
Well, okay, so first off, let's just dispel that myth. Let's bust that one wide open. If you lease a car, yes, it absolutely 100% positively will show up on your credit.
Mm-hmm.
And here's the thing with a lease. On the credit, it'll show a balance, because it's essentially the residual or whatever the balance is on it. And so some people say, well, what if I just pay it off? Well, guess what? As a lender, you can pay off the balance on a lease. We're still going to hit you for the payment because you have to have a car. And so even if you pay off a lease, you still have a car, you still have an obligation. And as a lender...
Wait, what do you mean by that?
Well, if I've
never... Okay, you're going to give me a little bit of an education.
Yeah.
I've never leased a vehicle. I've always just purchased.
Yeah, you can pay off your residual, but unless you're actually outright purchasing the car...
Is that only just for like a window of time, or is it for the actual value of the car?
Yeah, you're still making payments on it. Yeah, you're still making payments on it.
Okay, all right.
And even if the only way you can get out of a lease essentially is you could turn the car back in, the way we would have to document that as a lender, and I'm saying all mortgage lenders, we have to follow the same Fannie Mae, Freddie Mac rules, that we'd have to document that you turn the car in and that you no longer have any monthly obligation at all.
Okay.
But paying off the balance it shows on a credit report will not necessarily relieve you of that monthly obligation.
Yeah,
So
and that's because that lease is only
it.
for a window of actual time, not for the value.
Yeah, you're basically renting the car. So sometimes a lease is actually worse off, when we're trying to qualify somebody because we cannot ignore it, we can't discount it, we can't exclude it. We just have to deal with it.
You know where else we talk about issues like this?
Oh, in our classes?
Yes.
Yeah. Absolutely.
We have one coming up next week.
We sure do. October 13th and 14th. We got a 2-parter.
Yes.
Yeah, that's actually going to be fun.
Well, yeah, we're splitting what is normally the 5 hours into two much more manageable bite-sized pieces.
There you go. Yeah, this is the official first-time homebuyer class sponsored by the Washington State Housing Finance Commission. Mm-hmm. This is a required class for many of the first-time homebuyer and zero-down loan programs. So if you're thinking about buying something with low down payment or zero down even, where those programs are available in spite of COVID, this is a class that you would have to take. And or if you have family or friends that are thinking about getting into home buying, they're not quite ready, but they're getting close. This would be a really great class to take because it's going to give them the foundation and the basics to understand the process and know what options are available and know that home buying process, things to do and things to not do, like lease a car.
Lease a car, yeah. I feel like we should, because we haven't mentioned this in the last few shows where we've brought the class up. Just a reminder, folks, to be considered as a first-time home buyer doesn't mean that it's actually really the first time you've ever bought a home.
No.
Right?
If you have not owned your home in 3 years, you are a first-time home buyer.
Yeah. We've had people move here from out of state who are like, oh, I used to have a house, but it was years ago. Or actually, we had some people who, during the housing crisis,
I was just going to say,
had to short sale or maybe lost their home. And it's so many years later now that many of them definitely qualify for a lot of these programs again.
They suffered some consequences from the big housing crisis a decade ago.
And here's the thing. The reason I think people should know that this is an option for them is, as you and I both know from the statistics that came out of the housing crisis, most of the people who lost their homes during that time had never attended a class like this, because the homeownership continuing percentage of people who take these homes is super high compared to people who've never taken a class at all.
That's true. Yeah, statistically, if you take a first-time homebuyer class, your odds of foreclosure are dramatically lower. That's why it's a requirement for many of these programs.
Exactly, and it's a combination of all the loans that were available back then aren't even around anymore. And so this is an opportunity for people to get better educated and be able to do it right this time.
Yes.
And the reason I thought about that too is because you and I have a past mutual client who I'm going to be meeting with again soon, who sadly, through no fault of their own, lost their home. We had to do a short sale on it many, many years ago, but they're in a great financial position now, having recovered from that, because they actually had a catastrophic situation with their business that really is what hit them hard, and they're completely beyond that now, and it's great. So I'm really looking forward to seeing them. And actually, I should probably remind them that we have that class coming up.
Yeah, absolutely.
And we're doing it virtually. This is what else is new.
This is going to be a Zoom class. We are going to limit the number of participants so we can be available to answer questions and things like that.
Right.
So it's going to be a 2-night class, October 13th and 14th, from 4:30 until about 6:30 each night. You do have to attend both classes to get credit, to get your home buyer certificate, which is good for 2 years.
Yes.
As well.
Absolutely.
So to reserve your spot, how do they do that, Reba?
They can send an email with their name, mobile phone, and email address to info@teamreba.com. And we do already have some people signed up. And if you're sending us an email and there's 2 of you, like if you're coming as a couple or you're coming with a friend, we need everybody's contact information and name, because as you know, we have to give certificates and all of that. So that helps us make sure everybody's signed up. And then we're also checking who's registering and signing in into the Zoom call itself. And we have to track all of that for the state. So we do need to have all those details. You can't just randomly show up. We're certainly not going to make it publicly available. We need to be able to send a registration to you for getting in. And we'll have to use it as a secure site and all that kind of good stuff most people know Zoom has to have nowadays. And we have to make sure that you're there throughout the entire time.
Yes, we do.
There is no log on and walk away and go make dinner. It's we got to be able to see you the whole time.
That's right. This is a state-sponsored class.
Yes, so it's another reason why we want to limit the number of people, because I'm not going to try and track 100 people.
No.
Even though I can bring 100 people onto that webinar, we are not taking that many people.
That's right.
We're going to try and keep it. You and I haven't really narrowed down exactly. I think the max I would want to take is 20.
I think so. Yeah.
So we've already got, I think, 4 or 6 seats taken right now for sure. And that's just the people who are with people in my team. I haven't even checked to see anyone else that we've had come in, but people in my team who are working with some of our clients are doing that right now. So there's a little bit of room available still, and we'd love to see your happy face there.
There you go.
Or let us know if you have family members who you think would benefit from this, and send them the information. I guess you could just send a request for the information, because we actually have flyers we can send out. If you just send it to info@teamreba.com, my staff is more than happy to get you all the details.
You could even go on to my Facebook page, and I've got the current registration info up for that.
Oh, yeah, you also have an event, right?
Go into Facebook. Yeah, Eric is my banker, and you'll find me.
That's the whole thing. That's why I don't always know exactly how many people we have completely signed up, because we have lots of different ways to register.
We'll make it easy.
Got to track it.
That's right. Well, thank you very much. We're going to be taking a real quick break, pay a couple bills, and we're going to be right back. We've got more Open House at Team Reba with some market updates on what's going on in this crazy, crazy market. So stay tuned.
Open House with Team Reba on AM 1590. The Answer. Now, back to Open House with Team Reba.
Welcome back to Open House with Team Reba. I'm Reba Haas of Team Reba, Remax Metro East Side.
And Eric Cousins here from Homebridge Financial Home Mortgage.
All right. So we mostly talked about your spooky story and other stuff in the last segment. So I guess we're going to jump right on into what's going on the housing side of things.
Yeah, I want to know what's
now.
going on right now. And, tell me that the house prices are going down. So many people have been predicting the bubble.
Yeah, we just did a show about that and how much that's a big.
I'm being facetious about that.
I know you are, but because you and I have been talking about it a lot, I'm trying to look. That's the thing is sometimes when I'm bringing information on, I know some of it's anecdotal to my team and the people I'm talking to and all the agents, but I do cover multiple counties, so we do see a lot of the activity, especially in kind of the core, King, Pierce, Snohomish counties, that kind of stuff. But I'm always trying to watch what's really going on a broader level, which is one of the reasons why I'm a member of the Realtors Association, because they have both national, state, and local, positions, basically, right? And what's great is that we get access to the statistics that they're tracking, so I don't have to go and do all the research myself, and you don't want me to do all my own research.
No, it's daunting. There's so much.
I could spend my whole day just doing that kind of stuff if that's all I was going to get paid for. But you know what? I'm in a commissioned business, so that's not unless somebody's going to pay me for it. But I will tell you, the Realtors Association does work with sources that are given a lot of respect, including the Washington Center of Real Estate Research at the University of Washington. And so the Washington Realtors Organization sends out a monthly newsletter basically to all of the members. And that's the thing. Not all agents are a member. People throw around the term realtor like Kleenex.
Now, you're talking about realtor with a capital R.
Well, it's actually all capitalized, but
okay.
yes, realtor, because you're not really, that's the thing, that's a trademarked term. People use it interchangeably like Kleenex and, Q-tip and whatever, but all realtors are agents, but not all agents are realtors, right? I've said that, I don't even know how many times on the show and publicly. But the people who aren't members of this miss out on a lot of great information. Because, we have Annie Fitzsimmons, who's attorney who works with the Washington Association, and she's constantly
super sharp,
and she's constantly putting out videos and Q&A sessions. There's a legal hotline that we have access to as part of our membership, where you can ask lots of questions about the documents or situations, and it's a really great educational tool. But it also does market research. And they do it in conjunction with people like this James Young, who is the director of the Washington Center for Real Estate Research at the University of Washington, which is a mouthful.
That was.
It was a mouthful. But anyway, so you and I had just mentioned in the last few weeks, if not several months, that as we've seen COVID affecting the market, and not even just COVID, I mean, how many times have you and I said, there's a lot of our clients in Seattle saying, I'm sick of city council. I'm sick of this. I'm out of here. And they're going elsewhere, but they're not necessarily leaving the state.
Right.
They're still hanging around.
Heading to the suburbs.
Yeah, exactly. So an article that they just had come out in the most recent magazine was this. So they're talking about how here in our state, the population age 65 and over is projected to increase to 1.33 million people by 2021. Right? That's next year. Wow. Right? Wow. Represents an increase of just over 160,000 people, and it's a 13.7% increase from 2018.
Now, this is including COVID, effects of COVID? Wondering when that was.
It's kind of, this is just coming out because they're watching what's going on right now during the COVID market.
Yeah.
But they're also just saying, we already knew we were going to be impacted by baby boomers no matter what. Right. We've seen that impact because, the demographics are just that aging population.
Absolutely.
Right. So that impacts what kind of housing where people are going to be located. And frankly, through COVID, a number of people are more concerned about being in close quarters. I think retirement communities are going to be looked at in a whole new way right now.
They will.
Right?
Yeah, that's true.
But what's hitting us is we have an older population coming in. We've got a super tightening of listing volume. So statewide in Q1, we were down 22.7% from Q1 of 2019.
Wow.
It's very significant.
That's, you're talking about new homes coming on the market, down 22%.
Resale, yes.
And they were already tight.
We were already really tight, right? And since the onset of the restrictions, there's even tighter supply right now, right? So figures from the multiple in June are suggesting that supply and demand imbalances are even more acute than they were earlier, and we're seeing demand moving away from the cities to more outlying and suburban areas. And here's what that looks like. So rural and popular with older demographic areas where people are kind of trading down. These are areas like Jefferson County, where you might find towns like Port Townsend. Yep. Kittitas County, where places like Suncadia are located. Ellensburg. Right. Chelan County, where you find like Wenatchee and Chelan, of course. Those have seen more rapid house price increases than King and Snohomish counties. I find it interesting they didn't mention Pierce, but Pierce, as we know, has been growing.
Off the charts.
Yeah, it's also been growing very, very much. So these central Washington counties led the region in year-over-year house prices increases, with Kittitas County at 30%.
Really?
Pretty amazing.
Go Kittitas.
Yeah. Chelan County at 22%.
Wow.
And Grant County at 9.4%. And they're outperforming most other area markets.
So Grant County being like Moses Lake. I don't know if, there's some of the spots on the river, Crescent Bar and spots like that.
Those are also very popular. Yeah. So what we're really starting to find is that, like they even mentioned here on Spokane, they're seeing the trends elsewhere in the state with the median house price of $281,000 and a month's supply of housing. It's at 0.9.
Holy cow.
Months of inventory.
Yeah, in Spokane.
Yeah. And Spokane, by the way, is just now finally coming into the multiple listing.
Oh, good.
Yeah. So that's other breaking news kind of within our state, is that most people don't know that there's multiple listing services that service the state.
I have some clients that have been buying rental properties in Spokane Valley, and there are some deals there.
Oh yeah.
And you've got a good economy. You find buy near a college. You've got pretty much a guaranteed
Bellingham
rental.
has the same thing.
Yeah, it does.
Yeah. Any of these towns where there's like a college there.
Ellensburg does.
Yeah, exactly. And that's one of the things that, as you and I have both seen with some of our clients, I've had a lot of my clients who are in their 40s to 60s and even early 70s selling their places here in King County and saying, I'm out of here.
Right.
And that's all the areas that they're going to.
Yeah,
that's why I've done business in Camino and Bellingham.
Squim.
And I'm no joke. One of my clients is about to sell her place over in Alki, and I'm going to be driving over to the Silverdale area and surrounding towns because she wants to be close to her sisters. She became widowed this year, and that's going to be part of what we're doing. And I got to say, it's going to be a super challenge because it's going to take me back to like 1982 in real estate because she doesn't have a computer or a smartphone.
Oh boy!
So I have to do absolutely everything in person.
Yeah.
And she's someone that we have to be very careful with because she's in her 70s.
Right.
So she's, I'm going to have to drive her.
Like I have a few clients like that.
Yeah, we've been joking. Yeah. It's going to be like driving Miss Daisy a little bit. Because what I'm going to end up having to do is probably put her in the back seat.
Yeah.
Because she's, she's in the at-risk age group.
Of course, yeah.
Right? So I'm going to be like, okay, could you sit in the back while I drive you over to Kitsap County? And
do you need to go potty before we go?
It's going to get interesting. It's going to get really interesting.
I actually say that to everybody that rides in my car. Do you need to go potty before we go?
You can tell you had children. Of course, I do that to my dog too. So it's kind of the same thing. But anyway, so those were some of the things that you and I were looking at because, we'd been discussing before about the fact that for the state, we'd come down from what was a high in the overall state numbers where we were seeing 8 to 14% a year. to now we've been as a state average around 5.5. But these other counties are clearly, getting some pretty big, impacts against what that looks like.
Yeah, that's for sure.
So also I wanted to jump in real quick too, because I always tell you that I look at that market watch number. That's comparing the listings to the pending sold. So as we're going into the fall season and towards the holidays, we do still see typically what most people would say, they're like, it's a slowdown. The market will slow down. I'll go when it's slower and it will be less impact, right? And I won't have as much competition. And I just want to say,
when is that?
I want to say phooey on phooey on you. If that's what you're going to say, because
I hear that too.
Yeah.
I'm going to wait until this day or that day because I know that's the best time to buy a home. I'm going to wait till winter time. I'm going to wait till the
average sale
work that way.
The percentages of sales are higher.
Yeah.
In the wintertime.
No, I know.
They're higher than they are in the summer because you have less competition. But here's the thing, and that's also, just generically speaking about these things, right? But if I look at this Market Watch data right now, the pending solds for the last week are currently at 3,854. And that's pending sales. They're was recently just listed, has a contract on it, right?
Yeah.
The new listings for the last week was 1,947.
Wow. Okay. Well, that's good.
Yeah. Now, listing price reduced, because we keep talking about this too. Those numbers are still climbing up a little bit because we're at 1,116. There's 350 back on market. So we've had deals that fell apart and those homes came back on market. We have people who overshot their price point.
Right.
We're not depreciating. It's just people who overshot the mark. Right. But the number of new listings, we're now sub 2,000 for the week, but we're still close to 4,000 for pendings. So listeners, what that means is we still have a ton of buyer activity. And if you're the seller who's out there who's not selling yet, it's because you didn't make your price or your product compelling enough. Because you're not getting picked up in that first week like everybody else is.
That's absolutely right.
Yeah, so there's a ton of demand out there for the right product, not just any product. But we're going to talk about that and, a tantalizing thing, which is what's going to happen now that Boeing made their announcement recently. So we're going to talk about that.
Team Reba on AM 1590. The Answer. Now, back to Open House with Team Reba.
Welcome back to Open House with Team Reba. I'm Eric Osnes from Homebridge Financial Home Mortgage.
And I'm Reba Haas from Team Reba.
Thanks for listening in again on your busy weekend.
Yes, we love having you join us every week.
That's right. And, there's this saying that's going around like wildfire, stay safe out there. But some people, they're talking about masks and things. When I stay safe out there, I'm saying be careful on that ladder. It's the fall. People are up cleaning their gutters.
That's like that promo we did recently.
And all of that. Be careful
yes.
out there.
Well, especially considering we did a promo where you were fake standing on a ladder and we had you crashing.
Exactly.
Yes.
I have two friends that have fallen off of ladders this time of year. And, one of them, he really got messed up a little bit. Ooh. And, just be careful.
Yeah,
this
be
is
careful.
The falling off of ladder season.
Yeah, you're right. It's a combination of people cleaning gutters out and things like that.
All of that.
And starting to put lights up.
That's right. You know what I did last weekend?
I have not the faintest.
We had a couple people over, and I took a bed sheet and I put it up on the wall, and we had an outdoor movie. Built a fire.
Oh, okay. I was like, where are you going with that?
Had the projector out. And,
that sounds nice.
Just kind of sat around with, had some blankets and, a nice beverage and just watched a movie. And it was kind of fun, actually.
Yeah, like going old school, outdoor cinema.
Exactly. Well, drive-ins are coming back strong.
They are. Yeah. I know. All those people who probably sold those places years ago for redevelopment are probably like, darn it. If I just held on for 30 more years and it'd be coming back.
That's right. Maybe those speakers that hang on the window would still be working.
Yeah.
Actually, they never worked.
Well, nowadays they just Bluetooth it into your car anyway, right? Because nobody would want to have to touch the thing, or else you'd be wiping everything down.
Never worked anyway.
Yeah, no, they were terrible.
Yeah.
But doing outdoor cinema is totally fun. There's
really
actually someone in my yacht club who does that on their boat.
Oh,
So we can
that's
all,
a thought.
yeah, we can all be anchored in our own boats
Yeah.
and watch a movie.
Where do you?
Of course, he
hang
loves
the
to show
screen? You,
Jaws. He loves showing Jaws.
well, sure. I think that's what I'd show.
It's iconic. Yeah,
Yeah,
why not?
absolutely.
It's perfect for when you're on the water.
That is true.
A
You know,
good freak out.
You have to pick a movie that your neighbors won't be offended by. Yeah. So
Yes.
just be careful. Use some good judgment on that one. But,
Yes,
you know,
definitely.
yeah.
But no, the way he does it, the way their boat is laid out, the radar
Arch, yeah.
arch, yeah, they have a way that they
Can
put
hang
it
a
up
sheet
there,
there?
and yeah,
Oh, that's hilarious.
it's really cool.
That is
It's
really
kind of
cool.
fun. It's kind of
You
fun.
you got me thinking now.
I know.
could
Of course I
probably
do. Of course
that,
I have
yeah.
you thinking. I always have you thinking.
Fun.
I like to make you think.
Well, good. Well, before the break, we dropped the lazy bee bomb.
Yeah, because
So-
we wanted you to come around and stay out for the fourth quarter.
Yeah, absolutely.
Well, no,
So-
because you and I were talking about it before we went on the show, and because we were going to do something else, and we thought this is brand new news, right? This is or like real news right
Yes.
now. So it's like we don't want to ignore it. We don't want to pretend it's not happening because in a kind of a foreboding. Is foreboding the right word? I think it is. Foreshadowing. Pardon me. You almost were foreshadowing this a few weeks ago because you asked me, given some of the conversations going around up at Boeing in Snohomish County,
Right.
you were
Yeah.
like,
How's that
what's
going to
the
impact
market
our-
going to do about impacting the market there? And
Right.
at the time I said, well, because as long as tech is still strong, I didn't really think that it was going to have a massive impact. And then, of course, we get the announcement this last week of they're moving a line down to South Carolina.
Right. Yeah,
Now-
the 787 line, which is going to fall hardest on about 1,000 workers in Washington that currently work on that 787 line. And they're facing, of course, uncertainty from that decision. You and I kind of talked about this a little bit on the break. Our governor made in his public statement about this said that that Boeing's decision to take the 787 to South Carolina necessitates a review of our partnership and the company's favorable tax treatment. And I heard that, and I jumped
what
out of
hair
my
your
chair.
head stood
my
on
head
end.
exploded. And with a degree in economics, this is not something that you tell a for-profit company,
Right.
because that company has choices. They don't have to be here.
Right.
And you need to have sufficient enticements. And yes, okay, and all the, I know other people's heads are spinning now, corporate welfare and all that. Well, we're talking about jobs. And
Right.
We're talking about keeping jobs in Washington, and we're talking about keeping good paying jobs in Washington. And we're also talking about the job multiplier that every Boeing
Right. job
job creates, which is about 6 or 7. So we need to be mindful of that. The economics of a decision like this are huge, and they're long term. Day to day, are we going to get through this? Of course, we will. This our economy is not what it was in the 1970s, where the old billboard, last person out of Seattle, please turn out the lights.
Right.
It's not like that anymore. But
Right.
we still could do without losing how many thousands of jobs, especially in Everett.
Right. Well, if you extrapolate that means they're eventually going to completely be gone.
Well,
Right.
you're closing a line down. I mean,
Yeah. You said 1,000 workers?
I think it's roughly 1,000 that work on the 787.
That actually seems like a small number.
Yeah, it might be more than that. That was kind of one article I was reading kind of indicated that. But then again, you also got to think about all the ancillary businesses
and by the way, I'm not
suppliers and
saying
manufacturers.
Boeing person who might be the one impacted that I'm saying, oh, you're nominal. That's not it at all. I would have thought it was a larger
than that.
number
Well,
workers.
it probably is when you factor in all the other support
and
functions that go
contractors.
around with it.
And,
Oh yeah, that's the 7. That's
Right.
the job multiplier.
Right.
Issue. So
Yeah, it definitely will impact quite a bit. I just know that, like you and I, when we started discussing whether we'd bring it up on the show, I was like, oh yeah, I'm reaching out to all of my past Boeing clients just to say, hey, are you okay? Are you impacted? How
Yeah.
are things? And in some cases, I mean, do any of those workers get the option to move?
well, they
'Cause that's what I don't know.
Yeah, I think there's always a possibility. Of some
I have
of
had
that.
some of my past clients who have moved to South Carolina to be down there. So I would imagine maybe some of them have the opportunity.
I think that it really depends, but that could have possibly be a possibility. But remember that Boeing here is a union shop. Boeing in South Carolina is not.
But you know what?
It's
okay,
different.
I'm going to slightly be devil's advocate from the standpoint of we went through this at Boeing Wichita when they sold that facility to Spirit. Because my brother, who had worked there for decades, pardon my language, but he bitched a lot about a ton of things. And he was up in arms when they said they were going to sell to Spirit. And it was funny because I told him, I said, well, you know what? Here's one of the things. One of the reasons I never went into any kind of aerospace work, because I grew up mostly in Kansas near Wichita. Our family went to church in Wichita. And we knew, and that was considered the airport capital of the world or whatever it was, airline capital of the world, because they had Boeing, Cessna, Learjet, Beechcraft, all those different airplane manufacturers. And what I remembered all the time was watching the up and down of people going through either strikes or layoffs. And I thought, I never want to deal with that. And so I had no interest at all of getting involved in any industry that was related to it. But my brother was in it, and he was a machinist for many, many years. And so he was complaining, I can't believe they're doing this. And, of course, he came up here and was temporarily living, for like 8 years after they sold that off. But it was funny because he complained about how everyone got let go, had to reapply for their job. They, lost certain things. But the benefit that they got out of that was consistency, because Spirit didn't only work just with Boeing, right? They were a supplier to other manufacturers as well. So Wichita has actually benefited and now actually grown in that particular town.
They're stronger from it?
They're stronger from it. And that is an area that they don't have a lot of appreciation, and their housing is actually starting to see some appreciation. In fact, a lot of investors are going there now for their rental properties because the prices are so great and you can cash flow. So there are those, and that's another reason why we had Taylor Simon talking about what's the matter with Wichita. But I'm not necessarily saying I want to see that happen here, but some of those folks, if they choose to go down there, may not find it so bad. It just depends. We'll see. But we want to keep Boeing here. I agree with you. We'll have to talk about it more when we hear more about it on another show.
There you go. Well, thank you all for listening in. Hope you have a great rest of your weekend. Listen to us next Saturday at 2 o'clock.
Thank you for listening to Open House with Team Reba. To contact us, visit Team Reba at RE/MAX Metro Eastside on Facebook or email info@teamreba.com. Join us again next Saturday afternoon at 2 for more Open House with Team Reba here on AM 1590. The Answer. The preceding program was sponsored by Team Reba of RE/MAX Metro Eastside and Eric Osnes of Homebridge Financial Services.